see. There it is. Looking for the microphone. Doc here from North America. Good morning, good afternoon, and good evening. It's Monday. Thank goodness it's Monday. Just another adventurous day. Looking at the markets, they've been the world equity markets have been feeling a little pain. Nothing major. What in blazes is that? Let's cancel that. There we go. Cancel that too. And no interest in renewing anything. There we are. So you can see this: the U.S. stock market, the European stock market, so forth and so on, are feeling a little pressure there on the equity side. I guess that's the best way to describe it. The equity side. The bond market is very firm. Obviously, that's the flight to safety, and the dollar just keeps on finding ways to go up in value. I want to make like a cartoon joke of like, what are they afraid of? You know, that's the bigger question: is what are they afraid of? Obviously, something. There's no doubt about that. The markets are probably perplexed because of the way they're talking about what they're going to do about what do you call it, the inflation. And again, I've actually moved into the camp, and I've been saying it here on the webinar. I've moved into the camp where I don't take the inflation that serious. I mean, I know it's there, I see it, but most of it is it's a policy made. I guess that's the best way to describe it. The inflation we're seeing now is truly like, it's pretty much all the policy. I mean, it's President Biden's policies that are doing it. It's not like it's in other words, it's like supply chain problems. There's things because of policies, not because of like. It's one thing when an economy runs out of things. They run out of it, and it's really hard to get a hold of, and it drives prices up. That's what happened to the classic German one. After World War One, they didn't have any money. They'd been the negotiations with the settlement of World War One. They priced. They had enormous amounts of debt to pay, and so that put a lot of pressure on the German economy. So they couldn't bring in goods and services. Goods more than anything else. Like wheat and corn and just meats and just everything. In other words, it was really hard to be able to generate it. That was a really tough thing, and that's the inflation you always see where they, it takes a wheelbarrow, a device that carries dirt. You have to fill it up with cash, money to buy a loaf of bread. Whereas we're in an era right now, there's too much cash chasing too few items because government policy itself has altered the structure of the supply chain, and it can be changed. Mr. Trump has obviously proven it. It can be changed in a matter of weeks and months with no problem, and that's probably why the Fed chair, who still has not been confirmed, which is very curious. There's a push by the Republicans now to actually confirm a Democrat, because they said, basically Powell has not really done us any favors because he came out and he said, this is transitory, don't worry about it, and and then gave the House of Representatives an opportunity to keep on borrowing, and he added a few more trillion, not billion or million, but trillion for them to borrow. So I'm not convinced that. See, I think we're going to have a major political change in America coming in the next 6-7 months. And so we'll put up with this inflation. We'll see if it tops out in this area, like the 8.5 to 10 area, maybe 11 worst. And some are hoping that this last one was the biggest. And more than likely, it may just hang out a little bit higher, maybe 9. And I think that's what we're really seeing on the currencies. Now let's put the Swiss dollars pairs trade has been the one that's really, to me, has been screaming. That and the dollar yen one, both of them. Speaking of which, there was an article over the weekend about how they were, Japan was like, please Federal Reserve, save us, give us some money and lower the dollar, stop the dollar from running like a mad animal. So, and that's the whole jest with me. When we look at these pairs trades today, a lot of strength is in the dollar. Dollars. A matter of fact, I was saying to somebody over the weekend, they're telling me how the dollar is getting ready to lose its position as the number one and all that. And I'm like, do you know the dollar is trading at all-time highs right now? And he says, what? I say, yeah, the dollar is trading at all-time highs. I didn't know that. Everybody's telling us how the dollar is bad. It's like, no. It's been trading 3% off the all-time highs now for a couple years. But now it's trading at all-time highs, making new all-time highs. And that alone tells us that money doesn't have anywhere to go. In other words, and when I say money doesn't have anywhere to go, what that means exactly is investment money, public money, pension money, mutual fund money, all that stuff, insurance money that needs to be invested with a fiduciary responsibility. In other words, under law, doesn't have any. They don't have anywhere to go. They buy dollar things because they're the only things on the planet really paying a profit. People have kind of forgotten buy low, sell high. In the quantitative easing era, it's buy high, buy higher, buy higher, higher, buy higher, higher, higher. And so there's a real dilemma out there. Money needs to go somewhere where it can make money. Okay? All right, I'm done my diatribe. Let's take a look at them all. And as you can see right there, and I think I'm going to move these over. Move that over to there. And move, is it there? No, that's in the right spot. It is in the right spot. Let's move that back over there. There we are. And so you can see there, and there is the Swiss. And you see it on J4X. You can see all this green. It's been moving up. Every time the white line breaks down, it's a very short-term weakness, and it turns back up. Now, in this case here, it's been a few days, but it's still punching along. In our case here on the Chicago Quant, which is why we show you Chicago Quant, if it didn't work, we wouldn't show it to you. If it was less accurate than J4X, we would be showing you that as the primary all the time. But J4X does emulate our math pretty closely around the 70 percentile, which is pretty good to match up to our math. It bounces between 68 and 71. So that's not that bad. And so, when you don't get a chance to see the Doc webinar live, you can always go to J4X and tune this in and put the same tools we have in, and sure enough, you have that opportunity. Hey, DB, how you doing? Dollar is not ATH. Euro dollar is not ATH. ATH. What's ATH? ATH. What's that mean? ATH. Let me think what ATH means. That's a good question. ATH. Let me Google that. Let's see, is it there? Oh yeah, we'll move that over. All right. Let's see. ATH. And we'll Google that and see what ATH stands for. ATH. Sports nutrition drink? No, I don't think you're talking about that. That's for sure. Althos price today. Althos. Okay. So ATH to USD live market cap chart. Oh, interesting. Get the latest Althos price, ATH. Okay, so it's a crypto? Althos was developed to be a stable proof of work platform based on Ethereum. Oh, Ethereum, and okay, yeah. So, yeah, that's interesting. Matter of fact, I was talking with Wilco over the weekend. Wilco was a presenter here. Is it at all-time highs too? This Altho? That's neat. I'd like to see the components of that. Let me just move this over so people can see this. Here it is right there. What is a crypto faucet? Faucet? What are crypto debt cards? Okay, yeah. So it's almost like a... let's see what it says here. Althos was developed to be a stable proof of work platform based on Ethereum and UBIC. Launched in 2018, Althos had no premium or ICO or pre-mine. A community-run coin. The team's vision to develop blockchain based on video game projects on Althos. Okay. What are automated market makers? Yeah, I've been seeing that lately. I've been seeing advertisements to hire them, or people to be involved in doing it. What is the yield farming? These are interesting things. Crypto lending, metaverse, that we understand. Fan token, we understand that. Yielding. I see. Let's go back to the top. What is a crypto faucet? Okay. So, what are crypto faucets? How does a cryptocurrency faucet work? Best Bitcoin, so forth. And where's the Altho? I want to see a chart on Altho itself. Can you post a? Oh, okay. So all-time high. Oh, I see. I see. DX is not at all-time highs. Euro is not at all-time highs. Well, what? Let me think. Let me go here. Let me just minimize that for a second, and let's put. Here is the ETF. Well, let's do this. Let's do it on J4X. Right there. Right. Dollar index right there. Now that's on a daily. Let's go to a monthly. Yeah, so I guess back in February of 2020, it spiked up there 1 month. And then from there, this goes back to 2017. If we remove the Hinky ASCII, I'm not sure if it is or not, but what I have seen, let's see, what else can we find here? The Hinky ASCII kind of hides the actual. It's because it's an average. So that crazy month there where it spiked to there to there. So if it's not at all-time highs, what is it, like right on the edge? Because I know that the dollar index here in the States is at all-time highs. That's the, what is that? That's the cable. No, it starts off with the euro. The euro, then the yen in percentage, then the cable in percentage, all equal out to 100%. And then from the cable goes to Canadian. From Canadian it goes to the Swiss franc, and from the Swiss franc it's the kroner, the Swedish kroner. So, whereas, let's just show you on J4X, like Bitcoin. Where's it at? There's Bitcoin. You can see Bitcoin is well off of its all-time highs, trading in the 38s today, somewhere along the line. 39s? No, it's trading at 42. But they're showing you the... Oh, this is a monthly. Forget that. Let's go to daily. There we go. So today it's trading at maybe 38 and change. What is it? 38,920. Yeah, I was talking with Wilco over the weekend about that. Would you like to look at GBP? Sure, let's take a look at that, Jordan. That's a big disappointment, this GBP JPY. I'm sorry, GBP USD. I thought when they jumped into that weekly buy last week or 2 weeks ago, I thought, oh man, good. Now we're going to get a run, and then it just rolled right over. Look at this. And we went into the weekly buy after being in a weekly sell for like a while, Let's see if we can put it up there. So it went into the weekly sell here, and I'm thinking, oh man, we get into a weekly buy, maybe this thing will really take off, and we got into the daily buy right there. And then sure enough, it goes right back into the daily sell there on Friday. And and it closed in a weekly sell too on Friday. So we're like right back again. I mean, money is running away from everything but the dollar at this point. And I can only theorize. I mean, obviously, our math is the most important thing of all. It's the most accurate, way of reading a market is our math. And then what do you call it? Fundamentals and so forth are a secondary. So the only thing I can imagine what's going on is that they want return. They want to make money. One of those crazy ideas, like why everybody's here, like myself. We want to make money. We don't want to just trade. We want to make money. Would you like to look at GBP? Yeah, okay, there we go. Oh, and the yen. Poor yen. We've been talking about that. Rob and I even wrote that article about it. Now, the yen slipped into, I don't know, it didn't get into the daily sell because we had a red and green on Friday. And sure enough, it's still weak. But you can see we've been in that weekly buys from there. Let's take a look at it over on, let's do this too on J4X. Let's go take a look at, instead of Bitcoin there, let's take a look at the cable. And then we'll go to the yen in that. There it is right there. So cable's doing the same thing. It's rolling over. I mean, ugly rollover. Ugly, ugly. Below its trading range. And let me just go back to it real quick. See, it's punched its way through the trading range. There's the trading range. It's doing the identical thing that the Swiss is doing. It's punched its way through the top of the range that they had adhered to for a couple years. So money is definitely concerned. There's no doubt about it globally. Money right now is concerned. And when I, again, say money, in other words, the institutions that manage public money, be it pension funds or, mutual funds or insurance funds and so forth, that have a fiduciary responsibility to invest that money correctly, So it's obvious that they're running. They're running towards the dollar. So that means that there's a lack of the only reason I would think that they would run away from everything but the dollar. In other words, when they're running towards the dollar, the only thing I can think of why. I mean, I can't say that the world is following Doc's math. I mean, because obviously my math leads it. So obviously I don't believe the world is following my math. But what I do believe is that people are scared and they want to get a return on their investment. And so they're running towards the dollar even harder now, which they pretty much feel like things are not working. Been working on GBP weekly. You mean trading off of that? I was really surprised at this. I mean, we got into that buy there on the GBP, and it just went right back into the sell just as we go into the buy, and then it goes down for a couple of days, goes back into the buy for there, and then they smash it on. Was that Thursday? No, Friday. They smashed it on Friday. But we were underneath at that point. So, when you had a good general idea, there was a problem. There was definitely a problem. You didn't want to be long, that's for sure. And now, let's just take a look at the yen. The yen has been in the same boat. It's well beyond it's now at something like 15-year highs. And here it is on J4X. So the only thing I can imagine, Rob and I wrote that article there. We went into the weekly buy right around there in the yen. Let's see if we can show it to you. Where is that? Oh, that's it right there. Yeah, so you can see that right there. We went into the buy that week. There it is right there. We went into the weekly buy right there. So the only thing I can imagine, as trying to figure out what the fundamental is exactly what I've been saying over and over today for like the fourth time, and that is money is trying to go to safety and find a return in investment. Let me see, what's that say? The weekly daily chart. Smart. I hear you. Gotta take a sip of my tea here. And that's pretty much the name of the game right now. Money is trying to find a place to go, and they're running, and that the dollar will top out. We will see it topping out of this dollar soon, or somewhere. Maybe it'll go on like this for months. I don't know. I have a hard time believing so, but I'll follow the math. But the one thing I'm confident about is I think money, I really do believe money is running to safety. Because why would the yen, and more importantly, why would the Swiss, just bust through its couple-year range and just keep on rolling? And that says to me, fear. That's what that says to me. That's definitely fear. All right, From there, let's see, what do we do? We go from the, we did cable. Oh, I know it is. Normally we go from cable. Did we do the euro? I don't think we did the euro. Let's take a look at the euro this morning. Euro has been kind of impressive, actually. The euro has been relatively firm. It's at the bottom end of its range, but it's not exactly falling apart like everybody else, which is, maybe that's that. Well, okay, so it's just a little bit underneath the range. Nothing major there. You can see that right there. Now, I think that, this is what us currency traders for the last half a century almost now have been begging for as a competitor to the dollar. Something that wouldn't mess our statistics up so we could actually use fundamentals as a tool again. We've been begging for that for decades. And I know people always think that there's an arrogance. Oh, the Americans love the dollar. They want it to go through the moon, blah, blah, blah. No, we want it to just be stable. We want our currency to be stable, like the way the zloty is stable against the euro, or the Israeli shekel is stable against the dollar. We just want a stable currency. We don't. It doesn't have to be the most powerful currency in the world. We want it to be a stable one. It can be just part of the gang of most powerful. But the other governments, the longer they stay in this socialism, the less they grow. And the less they grow, the less value of their currency. I mean, it's like it's a vicious cycle. The more you tax, the less people make. The more you tax and spend as a government, people do less. Your economy grows slower. That's what it comes down to. No wonder, during the 8 years of Mr. Obama, he ran socialist policies. And they used to start, remember in the webinars, they used to call it the new normal. Mr. Obama used to claim this was the new normal. America was going to grow like Europe. It was going to be, 1.5% growth, whereas normally we've been anywhere from 3 to 4% growth, if not greater at times. Before we created the income tax in 1912, we were flying with big numbers. And so, the more you tax and more regulation, the less you grow. And the less you grow, your economy goes nowhere. And that's just a fact of life. It's called the Laffer curve. Laffer curve. So, it's just a fact of life. And America is a capitalist system, so, it's governed by markets. Supply and demand. In other words, you see something you like, you buy it. You see something you don't like, you don't buy it. End the Fed and we'll get the stable currency. I don't know. That's an interesting point. That is a very interesting point. I don't see. Well, let's take apart that idea, because I've heard that for a long time. I've been a very anti-Fed person myself. I think that in a modern world economy that we're in at the moment, none of these governments are going to give up their currency, which means they're not going to give up their central banks. And the U.S. is right there with the rest of them. They're not going to give up their central banks. When you look at things like gold and so forth, how well they basically have, not on a day-to-day or week-to-week or even month-to-month basis, and almost not even sometimes on a year-to-year basis. But when you look at gold over 5 and 10-year periods, gold has been a really good currency. It has held the value against inflation very well. But there's no way to, yes, exactly, DB. They're not going to give up their power. Now, if in stages, how could we clean this mess up? Responsible governments who tax less and put less regulation on people. In other words, free people, free markets. And so if you do that, and then you stop the politicians from debt spending at the same time. So in other words, whatever taxes they take in is what they spend and nothing more. Then you will see growth. then you know what happens. In many ways, the Federal Reserve and the central banks become less important. Because Ronald Reagan, all the way back in the 80s, said, why can't we just... Ronald Reagan was talking about it. He wanted to put an algorithm on the... now that we had computers back then, he was like, just put an algorithm into the money supply and get rid of the Federal Reserve. That was his attitude about it. I bet most of you out there never even heard that story. Can you imagine that? That's what Ronald Reagan was talking about right from the beginning. He said, you know, we could have an algorithm and let it just decide the money supply based off of inflation and employment. You know, I mean, that was pretty much what it came down to. And taxation. Put those three things together, and an economy is going to look a lot better. Europe would be growing, right? Europe's not really growing at all. I mean, you have your young tigers, I guess you could call them, like Poland and Czech Republic, Slovakia, you know, Hungary, even Bulgaria is popping along, and some of the young, you know, the new European Union countries from the old Eastern Bloc are growing. But when it comes to, and Romania, I think is getting its game together on some level, but you know, pretty much the rest of Europe, well, France is the third largest industrial nation now in the country. Poland has taken over the number 2 spot, and you're talking about a country that's a quarter of the size of France. So it just shows you, when you overtax and you overspend and you manipulate the economies through picking winners and losers, what we call that in America government interfering in open markets and free markets, picking winners and losers. In other words, they decide through political means who should get support and who shouldn't get support, who should be punished more with taxes and who shouldn't be punished more with taxes. And that's important. That is really important. Free markets, free people. So if you don't have a free market where you live, you're not so free. All right, I'm going to drift to my tea one more time. All right. Now let's jump over to, let's see, we just looked at the euro. We'll go over to the Turkish lira. That's what we usually go Swiss, euro, cable. Then we jump to the Turkish lira and then Canada. So let's try that. But traders, if you see something you want to see, just throw it up on a chat line. We'll stop what we're doing and go after it, because I like that even more. I enjoy that. So let's take a look at the Turkish lira this morning. And there it is right there. There's Turkish lira against the euro. Let's put it up over here. There you go. You see, we've been inside that range now for a while. We put that box up there. We started it here and said this is going to be the range now, because we took it from, further over. We looked at this area here and put these lows in there, and then put that high in. I guess it was that high right there, or that high right there, and that's defined the box. And it pretty much stays with it now. Now you can see there, let's widen this out, but you can see the Turkish lira is flirting with a daily sell at the moment and a weekly sell. So maybe we'll come down to the green line or something like that, which is the 50 percentile of the range. Now let's take a look at over on J4X, same situation. You see here the white line is piercing down just like our green line is piercing down there. And in many ways, we probably should make that a green line. That would be cool. I think I might do that. And then let's do that. Edit indicator. Is that it, maybe? No. Is that it? I don't think so. Let's see. Levels, advance, levels. Should be white. I guess that's it. That must be it. Outputs. Let's see what happens when I make one of them green. Yeah, there we go. Oh, I see. There's two things in there. Interesting. There we go. So our green line and that green line are heading down, breaking the dashed line here and breaking the zero line right here. So we're seeing that pressure on it. We've got a red dot there, and we've got a red hinky developing right there. So that pressure is there. Let's see. Jordan says Euro Yen. Let's see what Euro Yen looks like. Euro Yen. Euro Turkish Lira. Euro CAD. Euro Swiss. Euro Aussie. You're telling me we don't have a Euro Yen? Let's try Euro Aussie. We'll fix that. There it is. Whoa, what did I just do there? Alright, let's cancel that. Let's do that. There we go, that's better. Something's wrong there. Oh, that's a 2-hour bar. No wonder it doesn't make any sense. Alright, Euro, let's try that again. Let's see if it's in there hiding somewhere again. Somehow or another I tuned into a 2-hour one. That's 2-hour. Okay, not daily. So let's go to... Let's do the Euro... There's Aussie Yen. So let's go to dollar yen, Euro Yen. There we go. It'll spill out in a second. Oh yeah. What's up with this thing? There we are. Euro. There we go. That's better. Let's get the weekly in there. There we are. Now there's the Euro Yen. Okay, close. There we are. So we went into the weekly buy right there. What was that? That was a week later than we did on the dollar one, because we went into the weekly buy here on the dollar yen. A week later we went into it there, and we can take that one and move that to there. It was in the buy from there to where? To there. And it went into a sell, and then it went back into a buy right there. Nope, one back. Like so. And then it went into a sell Friday. Like that. No, not Friday. Today it's going into the sell now. Because it has a red and a green there. Let's widen that out a little bit for you. And so that's where we stand at the moment. Wow, that was a long ride down too, wasn't it? In that weekly sell right there. Let's just throw that in there. That was a sell that went on for... Oh, it went into a buy there and then went back into the sell the next day. Okay. There. And stayed in the sell all the way down to this bottom in here. So that was a pretty cool one. And it was in a weekly sell. Did it go into a buy there? What did it do? I think that's a buy. So it went into a weekly buy there and went right back into the weekly sell here. Interesting. And it was in the weekly sell here at the same time. All right, now DB says something. What happened to the dollar ruble pair? Almost every broker I've stopped trading. I assume it's the sanctions. US is still trading it. We're still trading it here. We call that the currency that will not be named. It's like Harry Potter. The currency that will not be named. There it is. It's playing with a daily sell today, right there. It's been in a weekly sell since up in here. Maybe things are going to change. Every time I see the currency firm up, it's locked to the dollar now. So the Russians have locked their currency to the dollar because now it's backed by oil and gold, and they're dollar denominated. So I don't know if you heard anybody say that, but that's exactly what's going on. So the currency now is backed by gold and the oil, and they're traded in dollars. So that's a healthy thing. Does that make sense? I think it makes sense. All right. So there it is right there. We usually do. We go to Canadian first, though. We usually go to Canadian. So let's take a look at Canadian. Canadian really surprised me how it punched itself up. You can see that right there. And you can see it closed in a weekly buy there last week. Kind of, again, another flight to safety, which is really, really surprising. I really don't expect a lot of that, but there must be something brewing. Their money is all weekend long. I saw articles, really negative articles, very nervous articles. I can't get access to the pair, unfortunately, even on Dookie. Yeah, right. Well, right now it's the currency that will not be named. Well, once they resolve this Ukraine situation, then it'll probably get back to normal on some level. I would imagine what they're doing right now over the last couple of weeks is they're negotiating, trying to find ways to retire Mr. Putin. I think that's how it's playing out. So, we'll watch that play out over time. And I'm sure it'll come to some type of... I was just talking about someone was talking about Uganda yesterday to me. And I said, oh yeah, Idi Amin. And they said, yeah, they killed him. And I said, no, they didn't kill him. He retired in Egypt. So he lived the rest of his life pretty comfortably in Egypt. Out of the spotlight. So that'll probably happen. Mr. Putin will find somewhere to live, and life will be good, and that'll be it. And they'll have, and then maybe this is the beginning of more freer markets and free people in the Russian Federation. Maybe this is the beginning. In other words, I've been comparing to the Soviet Union demise. I've been relating to that as in my head, I've been relating to that as the what do you call it? The Revolutionary War. So in other words, I've been thinking it's been like the 1770s took us to 1792. President Washington was nominated as, won election for president. So you're talking about 14, 16 years. Now, we did not have the harness of socialism and communism on our backs that the Russian Federation did. So, you think of that one in the early 90s, 92, you put 17 years to it. And that comes out to be, what is that? That's basically about 2009. So you figure, the extra bunch of years to 2022, the extra 13 years or so, has probably been because of the system was trying to replace socialism, communism, which was, they still adapted to some parts of it, but at the same time, they tried to be more like European socialists, but with a little bit firmer hand. So I think they're coming down to, maybe they're going to join Poland and Bulgaria and Czech Republic and Slovakia and so forth, and Hungary and all. Maybe Russia is going to gravitate towards their lifestyle, and where the wealth of Russia, which is enormous, will become part of a free market system of some form. Right now, it's not really a free market system. So I kind of look at it that way. I know it's wishful thinking, but I keep on watching the currency, and when you see the currency now, the currency that will not be named. Let me just go back to it. Let me put the Canadian up on here too. There's the Canadian on J4X. But the currency that will not be named, right there, is moving into the 75 area now because it's locked to the dollar, and the dollar is running. So, and in some ways, the strength. Now that I say that out loud, think about this: the strength in the dollar may literally be because the currency that shall not be named, the Russian Federation, has locked their currency to the dollar now. So maybe it's making the dollar even more stronger because they've maneuvered their economy to be backed by dollars, basically. I know they think it's just oil and gold, but those two items are traded in dollars. So if they're traded in dollars, then you're basically locking your currency into the dollar. And I guess that'll tell us the truth. If we see the dollar back off and we find the currency that will not be named trading back at 100, then that tells us that it was because it was locked in on the dollar. There you go. All right, from there we'll go to what we normally do is from the Canadian, we always go over and take a look at like gold and silver. So let's do that real quick. We look at gold and then we look at oil, really. You can see gold today. I mean, really, if their currency was truly backed by just the metal, it would go down in value. It wouldn't be gaining in value, and it's gaining in value. And, you can see this slope right there. Gold has been going down. It's come down from the 2,000 area down to the $1,898 area, and the currency that will not be named. Where's it at now? The currency that will not be named is right there, doing the same thing. It's been moving down from the 100 area down to the 75 area. So, that's just even more confirms what my insanity of opinion. Because we're not using the math, we're using my opinion on that, but we're following the math. In other words, when in doubt, follow the math. And then I guess you can go look. We can take a look at oil real quick, and oil's doing the same thing too. So if their currency is being backed by those things, obviously it should be going up, not down, right? And it's not, because the dollar is more dominant in those two products, crude oil and then gold. Right there's the crude oil. Crude oil is doing the same thing. It's come down over the last week and a half from the 109 area. It's trading now at 97 area. And again, when we go and look at the currency that will not be named, it's gone down from the 88 area to the 75 area. If you want to use the same measurement, time-wise, we're right there. There's the 90 area down to the 75. Either way, obviously, if they were just backed by gold and silver, gold and oil, this product should be up, right? Because it should be losing money. But no, the dollar is making money, and so this product is now locked to the dollar. Yeah, we just follow the math and the end result, and try to figure if we can put some fundamental concept to it. It's been a failure. Janos has done some, he's head analyst for Dukascopy, and he has tried, and I've commended him. He's done great jobs, done great work trying to put fundamentals, how to trade fundamentals. He's gotten angry at it to the point where he has literally gotten rid of the video. But I really wish he left it up there, because it is so factual and so clean and clear, about how to try to trade fundamentals to the markets anymore. And it's important. I think people should know that the fundamentals are not exactly something you can trust. Technical analysis is so much more insightful. And then when you have, our technical analysis with it, it's yummy, yummy. So, all right, where do we go from there? From there, we go to the yen, but we've already seen the yen, and it's, historic move up to 15-year highs. From the yen, because we looked at the gold, and the gold is going down, we usually run over to the South African rand right there. And sure enough, It's doing exactly what it normally does. The average norm or the mean is when gold is going down in value, this is moving up against the dollar. In other words, the dollar is gaining against it, not losing against it. There's more rands to a dollar. Now, it's a nice tight range. You have to say that. That's for sure. I mean, when you really look at the South African rand, it's been trapped in the 13.5 area to the 16-ish area for a while, and that's a good thing. You want your currency to be stable. That's what you want. Just like Turkey has now stabilized its currency through a very intelligent way by giving out free puts. The option concept. But that is where we stand now when it comes to these currencies and so forth. All right, from there, the last one we look at is the Mexican peso. Right there. You see the peso is trading its range. Oh, I didn't mean to grab that. Right there. So the peso is trading inside its range, bouncing off of that and trying to lift towards the 50 percentile right there, which is the green line. Yeah, we put the we'll put the what do you call that thing? The Chinese yuan up, but it's not really a currency per se. It's just it's like a conduit. It's like a faucet type of thing. It allows you to buy in. It only trades 2.5% in the world. The Chinese yuan internationally only trades 2.5% in the world. So it's a disappointing product. Let's find it. Let's put it up in our math. We'll show you what we see there. Which one is that? That's the dollar CNY. Okay, so let's see if we have it in there. I know we've had it. We've put it. Let's put it up on J4X too. I know it over the weekend. The international yuan had problems. Yeah, you can see that there. It's gone from 6.3, is it, to 6.6. I have a hard time taking that too serious. I really don't believe. It doesn't float. It's not a floating currency, so it's pretty hard to take serious as a currency. It's more of like I can hear the name of it. When you're doing swaps and like you're converting something to something else, it's more of a conduit. It's not really a currency. Let's see. Let's put it up on the screen. But they talk about it like it's a currency, and they make they pretend that it's a currency, but it's not really a currency. Let's put it right there where the CAD Swiss is. I don't really pay attention to it too much because of that reason. I mean, trust me. If it was a real currency, we'd follow it every day. But it's more of a conduit. It gives buyers and sellers of products in China something to convert to, because it's a domestic thing. But to be a currency, you really got to float free and let the marketplace decide its value, not the government. And that's what they do. The government sets the price. All right, so there you go. Let's give it a spin. There we are. Let's widen it out. And let's see. It went into the weekly buy back here in the 638 area. Let's put that in there. There we are. So if we move this up and move that like that, and then we widen this, and then we'll move that up. So you can see there, the currency went into a weekly buy here. Let's see, we did a daily buy there. Let's do that. I'm going to put the lines in and we'll change the colors for you. So there's the buy. There's a sell. There's a buy. There is a sell. And then there is a buy. Is that the buy? Yeah, that's the buy. And I think it's stayed in it ever since. There we are. And that's the buy signals, the green, and the red signals are to sell. There we are. So you can see that last situation right here. It's been pretty much, running from this area here. But again, pretty much most of that is government policy. They set the price of this. So it's not a free market. Indeed, I mentioned it because of the incredible impulse it had lately. Yeah, but even so, to me, it would have to move like the way the Turkish lira had, like from 6 to 12, to 12 to 18. And they're not going to allow that to happen because it doesn't float. See, the Turkish lira is a currency. The dollar is a currency. They float in the marketplace. Supply and demand has a lot to do with it. I mean, obviously you got government interference, but by them coming into the markets and all. But overall, they float. They're floating, and they're it's different. You know what I mean? And whereas the what do they call it? The yuan, the Chinese yuan, is government set price every day. They set the price. So if it goes up, it's only going up because they have to make it go up to look like they're feeling the pain of the dollar. Like somebody, you got to imagine. Let's do this. Let's throw the yen up there, or the Swiss. So there's the yen. So that started all the way back at the war, okay, or a week or two after the war, and it's been on that mad move. And then you look at, say, the Swiss. There's the Swiss. And, it went into a buy back there, played around, came back to the higher end of the... it was a higher low, of course, you can see right there, higher low from here. But then it went on another mad run at the end of March, right? Just the way the yen had done. We'll just show you the yen real quick. So, except for the yen was even more pounded. So, let's go to the yuan now. The yuan, it was like no one was really paying attention. Like, oh, who cares? The world markets are moving all over the place. We're not going to care. We're China. We're a government. We're a government entity. So in other words, look at it. It pops up a little bit here, and then just goes sideways, like as if the world market is not doing anything. And then going into the last 5 days, they start to pop it. You see this weekly really starts to launch itself, and the daily, which was in a buy, they keep on really takes off here. And they're all pretty much the same. And then yesterday, it went from 6.5. We'll round to 5.27 to 5.3. Okay, so it went from 5.3, 6.53 to 6.59. Right? Day before it, it went from 5.23 to 5, or I guess 5.3 to 5.5. Okay, so it was a little bit less. And in the last couple of days, it's been, compared to the way it's been trading, you can see these days right here, they realized they needed to do something to look like it's a currency. So they do these things to dress it up, to make it like a currency. There's probably some supply and demand situation there. I'm sure there is somewhere along the line. Remember, they keep a lot of their money outside the United States, outside of China. Yeah, fully controlled, exactly. So it is fun to look at, and see what the math is telling us about it. But it's because of the control of it. And it's only trading internationally like under 3%. It's awful hard to take it too serious. You know what I mean? I don't really. I find everything they say about China on the positive side is just some type of spin, some political spin. And, everybody, look, our socialists are running our government at the moment. So they're going to tell you how much we want to be like China. I mean, we hear it all the time. They want to be like China. They like the idea of the dictatorship stuff, our left and Biden and all those guys. They do. They say it, and the media loves it. The media thinks that's a wonderful thing. And so you see it throughout most of the world. You have these mild or vicious dictatorships, and they control the economies, and they call it like socialism or something like that. But overall, it's not free markets. And without free markets, you don't have free people. And without free people, you don't have an expanding economy. So I don't look at China as anything more than literally like a colony of the United States, since they get $300 or $400 billion a year of purchases from us. Imagine if we did the opposite. If we spent that money, instead of $350 billion in China, we spent let's say an extra $100 billion in Europe, and then $100 billion in Africa, and $100 billion in other Asian countries, and then that's why China had to help its flu thing, Anyway, that's just what it is. All right, traders, what else we got? Let's take a quick look, because the markets are opening up here in about a minute and a half. Let's take a quick look at the stock indices and see how they look at the moment. And we've seen oil and gold, they're all moving down. Silver's doing the same thing. It's bouncing off a little bit of its lows so far, but it's been in sells for 4 weeks now. The S&P 500 went into the weekly sell last week. It's a little flattish at the moment, nothing major. It's down from closed at 4,267, and it's trading now at 4,244. Not too bad. And the Dow Jones Industrial Average right there, same situation. And you can see it's in a weekly sell now, and you can see it's been in a daily sell for days. And then let's look at the NASDAQ 100 or the Tech 100 on Dukascopy. Same situation, in a sell for 3 full days now, and going on a second week of the weekly sell starting off. So that is what it is, traders. Catch you all tomorrow. Happy trails to you until we meet again. That'll be tomorrow. Happy trails to you, to all our trading friends. Later, traders. Be safe, be smart.